Hey traders, Stephen here with tradesplan.com. It is Friday, December the 3rd. We're going to look at the overall market and then we're going to look at some ETFs as we usually do. I want to really dive right in here to the NASDAQ. It has been a rough few weeks, right? A rough 2 to 3 weeks. This was the day right here that Powell got reelected, and it's kind of been downhill ever since. You've had some of the new variant that has really rattled the market, a lot of distribution. We only right now I understand that it's hard to ignore what's going on in the news, right? That's the hardest thing to do as traders, kind of shut that stuff off. But we have to look at this objectively. And what I see right now is the market, it has been punishing growth stocks the last 3 weeks, right? And I have felt it, right? Because I love growth stocks and that's what I trade. But the reality is the NASDAQ pulled back to the 50-day moving average and then made a bullish reversal right at the 50-day moving average. This morning jobs report was very unimpressive, even though unemployment rate went down, but jobs report was a huge miss. It could be one of those things where bad is good, and then, the market thinks that the Fed is going to slow down or is going to not slow down on tapering. So there's just a lot of different ways you could look at it, but let's just look at what is in front of us, what is on the chart. The NASDAQ pull. If you didn't see any of the news, the NASDAQ pulled back to the 50-day moving average, bullishly reversed, and is up a little bit this morning. Okay, now here's some things I'm going to pay attention to. So the pink line, right? The pink line is the 20-day moving average. The market has been getting rejected at that line the last couple times. So right now we are about 1.6% under that line. If the market pops and then just gets another rejection and kind of gets slammed, we could really see some further downside. So we'll just kind of wait and see. To me, that rally line that tends to be support and then resistance, and the market got rejected several times this week. Got rejected here. It had a failed breakout on Monday, rejected Tuesday, rejected Wednesday, and is living below it at the moment. Okay, so we'll just kind of wait and see again. But right now we do have a pullback to support at the 50-day moving average. Regarding the ETFs, I'm going to be 100% honest with you. There is just not a lot of, if I rank it based on what is the strongest this week, you have a bunch of lagging emerging markets, and I got to be honest with you, none of the charts really look good. Like South Africa, Russia is pretty much an oil chart, a USO chart, and all of these other emerging markets, they all really pop this week, but to me they're still laggards, right? They have not led the market for any significant period of time, so I really don't put a lot of stock into it because they're still in downtrends. What I decided to do this time around is look at, okay, let's rank ETFs by what has the strongest relative strength over the last 3 months, right? So instead of paying attention to this week, which is filled with laggards, let's look back and let's look at some of the strongest ETFs and some ones that are holding up, and let's see which ones we could potentially buy on a pullback. This carbon ETF right here, the Crane Shares Carbon, it is just that 45-degree, what I call steady Freddy, right? It just is a nice, pretty boring uptrend. This ETF is extended. I would definitely wait for a pullback, but honestly, I think I said that a couple weeks ago, and it just has not pulled back yet. But that doesn't mean I'm going to get excited and chase it. But it's really something to keep an eye on, because when you have something that just outperforms for so long, right? I truly believe trends tend to persist, but it probably does need a breather. So I'm just going to go down the list. Coffee. This is also extended. You have coffee and wheat in the top 10. Agriculture. This is also extended, right? Because it broke out. It had a little pullback, and then it just absolutely took off. So with me, coffee, I'm not chasing this either. I'm waiting till it gets probably back close to 60 at this support level right here. Right, I don't know why they didn't drag. Let me redo that. Right, kind of in this zone. My mouse isn't working this morning. I'd probably wait for it to get back to that level before I would consider a trade in coffee. Semiconductors, very, I mean, it looks like a double top, right? it's in so, and then maybe you have a neckline right here. Maybe you have kind of a mini head and shoulders. I can make the bearish case. I can also make the bullish case, which is probably what more I'm leaning towards because it's in an uptrend, right? This is in an uptrend, and the semiconductor SOXX, I mean, it continues to show strength. Will it get hit, hard if the overall market does? Sure. I mean, it's aggressive technology, but the way I see it, in my opinion, is this has kind of been underperforming. You see this blue squiggly relative strength line? It has been slightly underperforming to performing in line with the overall market. All of a sudden, in the last 2 months, the relative strength line breaks out relative to the S&P 500. And what that means is all of a sudden in the last 2 months, you have some major outperformance. So this is a industry that I think has more room to go if the market holds up. Now, with anything this aggressive, you need the market to hold up, right? You need that right environment. But I'm not looking for, this will break down if the market breaks down, but I'm not looking for bearish. I'm looking for bullish at the moment. But I still think this does need to pull back a little bit. It's so strong, it hasn't even broke the 20-day moving average. And that's pretty strong considering a lot of the more aggressive growth stocks broke the 50-day way down here this week. So that just goes to show you how strong semiconductors are. So again, a little extended right now. I need it to pull back more. I do own some semiconductor individual stocks, and I'm just trying to hang in there because it's been a nice run and they've been incredibly strong. So it's just always been better for me to try to hang in there, sit with the pullbacks as long as they're reasonable, than try to, pick the perfect top and the perfect bottom. Another chart that I wasn't really paying attention to and didn't until this morning, this is about the neatest looking chart. When I say neat, I say clean, right? Not volatile. Home construction stocks. I mean, this, broke out right here, right? And it broke out, it pulled back, it found support, and then it popped again. It was up a ton yesterday on Thursday. It broke out, which where I truly, let me redraw this, where I think the better breakout zone is right here, right? You have all these levels of resistance at the bottom of the consolidation. That would be the better entry, and it came very close right here to that level of support. So what was resistance is now support. This to me looks incredibly good. If I were to have to pick something out of everything in the top 10 to buy today, I would pick home construction. Now, I don't know how it's going to react today relative to jobs reports or anything like that, but look at the relative strength line that is starting to rise. So this to me, nice and neat, nice and clean, orderly fashion, breakout, pullback, re-break. This to me looks pretty good right here if the market holds with just a stop under this week's low. Bitcoin has been very, very volatile. It has pulled back, right? It had a really, really nice move. It has pulled back. This trust is sitting at the 50-day moving average, the GBTC. I probably wouldn't consider buying this pullback until it breaks above this week's high. So, it's kind of zigzagging, right? Let it break above that, zigzag right there, kind of that double bottom. Let it break out of that before considering getting in, because it's been underperforming the overall market for a couple months now, right? This relative strength line is declining even though the price is increasing, but that just means it is increasing less than the S&P 500. So it's not showing a ton of strength right now, and that's I want strength. Wheat, this is something I've talked about for a while, and it really just started to get going. But look, I mean, this is a pretty good base. You have a 6-month consolidation where it didn't go anywhere. It broke out, found support, continued, pulled back, found support at the 50-day moving average. Right now, it is about 4% under the 50-day moving average, so this might be a reasonable entry with just a stop under this week's low. Again, this, just like anything, like the market can change at the drop of a hat, right? It can be up pre-market as it is right now, as I'm recording this 10 minutes before the market opens, and then kind of get slaughtered by the end of the day. So I think when the market gets volatile like this, at least until it is in a clear uptrend, right? We've gotten out of this volatility. Sometimes it does make sense to try to wait until the end of the day before making trading decisions to make sure the market doesn't start strong, everyone gets excited at the beginning of the day, and then finishes weak. Okay. Rare earth metals. This chart looks not very exciting at all. It hasn't gone anywhere. It can't break out. It's really volatile around this zone. I'm not excited. You got a bunch of, this chart right here, this IDRV, right? iShares self-driving electric vehicle and technology. Again, it looks honestly just like the semiconductors ETF. Kind of looks like a Head and Shoulders, doesn't it, right? Where it could break down, but the bullish case is it is outperforming the overall market. It didn't even come close to breaking the 50-day moving average. So, I mean, if it breaks down, sure, it could sell off, but to me, this is showing outperformance. All right, so I'm looking more for a pullback closer to the 50-day moving average and waiting. I think it's still a little extended. I think it might even need to consolidate and go sideways for a while. So you have a couple of these, this CARS, KARS. This one looks honestly exactly the same, maybe a little bit weaker because it's closer to the 50-day moving average, but you kind of see that Head and Shoulders, right? But again, you can always make the bullish case, you can always make the bearish case. But if it's in an uptrend, I'm going to make the bullish case for it until it breaks down, and then I will confirm, kind of switch my position, right? It goes from bullish to bearish, right? I need that bearish activity, that bearish event, right? The break of the neckline for me to switch. One other one I want to look at is this lithium battery. What's really interesting is, and this is, I'm going to throw in a personal opinion about this. And look, doesn't this chart look the same, right? You got kind of an inverse Head and Shoulder right there with the neckline. Man, I think the rise of electric vehicles over the next 3 to 5 years is just going to be tremendous. They all need lithium. I do not think there is going to be enough lithium to go around. This is something you have to mine. It's just a personal belief. It's just not adding up to me. This is probably an ETF I would always have on your watch list because, I mean, they have gone up a lot. That doesn't mean they can't go to the moon. And this is just one of those industries that I think has that, moonshot potential, even though it looks like it already has. But, it's just all about supply and demand. So something I would really keep on my watch list, probably for the long term. So again, when I'm looking at everything, I think home construction probably is the neatest, most orderly looking chart. It probably looks like the best opportunity as of right now. Wheat, I'm just a little bit more excited about home construction, right? Wheat, honestly, has probably just frustrated me too many times. So probably looks like the best opportunity right here. But again, right, the market can do anything. It can change like that. Right, more new variant cases start to spread throughout the U.S. or just whatever the case is. So again, be cautious, but I'm still looking at the glass half full until yesterday's reversal, until Thursday's reversal. That low gets taken out. I'm gonna keep my glass half full mentality.